All right, welcome to Liquid Sundays, everybody. I have in front of you an SPX weekly chart with some notes. This is from my alpha alerts I posted on Friday. Just a market matrix overview, if you will. Weekly chart, I was looking at potential, rounded top here, and we did get a weekly close below these November lows here. And if you look here, we got change of character. Same thing happened here last year around the same time. Change of character. Obviously, a little bit of a wider range here, but anyway, this is what I was kind of watching out for some follow through to the downside. Um, so let's just jump right into the notes, and then we'll get into some closer look at some of the charts. We'll look at some tickers. We'll look for some areas of interest. Um, some of the trade ideas I posted last week kind of playing out. So we'll touch base and we'll go over some of last week's price action. We can look at Friday's price action on SPX, on SPY, and the ES. So let me just start reading right from my notes, and then we'll get into the charts. U.S. equities SPX QQQ down 1.8%, so hit yearly lows on Friday, breaking below last November's support levels. No real bounce or stabilization here. Markets still tied to rising WTI crude, pushing toward 110 to 115 target. So if you got in last week, looks like we're looking for that break of 100 really, and we kind of tested it or already testing it off the open here. I think we hit 99 already, but anyway, you can take some partials around 100, see how it reacts. A break above 100 is going to likely send us to that 110, 115 target pretty quickly. So we're also watching U.S. and European yields. So both of those pressuring stocks without signs of peaking yet. Breadth has been weak. Few stocks are above their key moving averages or near highs. The McClellan oscillator is oversold, but it is unreliable to predict bottoms. Decline broad based, not just tech led yet. SMH vulnerable below 368 to 374. We can look at that chart in a few if you'd like. Neckline of the potential head and shoulder pattern could see rotation lower into April, May before a final tech sell off. Spring equinox timing March 23rd to the 24th cycle might bring a short term low, bounce early next week. So that's this week. Plus, midterm election year seasonality helps, but confidence is low. Likely just a low and not the low. So stay cautious. It's hard to buy dips while crude and rates volatility, no true reversal, no capitulation yet. We're going to watch 100 on crude for a near term pivot and yields potentially peaking short term, but still trending up. So defensive posture until clear stabilization. All right. So here's your weekly chart here. I'll remove the notes. We touched base on change of character here, and we're going to look to see if there's going to be some continuation here. I did talk last week in last week's class. Potentially you might see a channel start to develop. I don't want to go ahead and assume. I mean, there's lots of possibilities here, right? You can take a channel, a trend line channel, and kind of start to formulate different ideas of what's going to happen here. But for right now, pressures on equities and the momentum is to the downside. So we may get a short term bounce. We're going to look for a resistance, likely going to sell the rips. Um, I like to just put it out there. We can have sharp bullish rallies, even if we're in the beginning of a bear market cycle. So keep that in mind. Here's the daily chart. It gets a little bit easier to see. Potential channel starting to develop here, something like this, right? This is just speculation, but like usually, more often than not, the market doesn't just go straight down. So It will chop around, bounce off of resistance back down to support. Um, so we'll keep an eye on that. So there's the daily chart, something to keep an eye on the SPX. We are also looking at WTI. Um, Definitely want to keep an eye on oil prices heading into this week. I don't know if there's going to be any stabilization in the near term future. It doesn't feel like it to me, but I'm not a geopolitical expert. I don't think anyone really knows what's going to happen, but doesn't feel like anything's going to get resolved anytime soon. This conflict, no matter what you hear anyone say, is very complicated. And it almost feels like a bell that cannot be unrung at this time. That's my own personal feelings. So we'll see what happens. But here's WTI. We basically opened up around almost $100, and it's filling the gap here. So we'll see what happens on this pullback here to this gap fill. So the idea that I had put out to the Discord for tactical trading. Um, I'll put it out here. I don't know if I think I put this in my ideas, but basically, I can post a portion of it right here. Let's see here. This was not. This was just some tactical idea here. Um, but basically, long crude, April 17th. Calls, or you can use CL May futures. I said add entry on a hold, add closes above 98.99. So that was last week. Post confirmation breakout. So basically, targets are going to be 110, 115. If we can pop up above 100, so stops below 94.95 would invalidate the breakout. As always, position sizing 3 to 5% portfolio volatile acts as equity downside hedge. Okay, so that's the thesis for longing WTI or crude CL futures. Also, another tactical trade that we can look at is shorting some of the metals, so gold, silver, copper. I did bring up a copper idea here. Let's see here. Sorry. Ticker CPER. Here is copper. Um, this is not the one I'm looking for. Hold on here. Where are we here? Uh, Types here. Hold on. This is not the fund I'm looking for here. I'll have to come back to this one. But anyway, let's look at gold, GLD. Come back to that one. So here was a gold idea here. Get rid of this here. Gold. Here I'll post this on the chart here. Copy here. Okay. So gold closed. This was on. Let's see here. 318. 318. So right here we were looking for gold to close below 444.74. March 18th sharply down 3.16% that day from prior close 549. 459. So that was right here. So you can see the gap down there. So basically, you can use the gold options if you'd like. April 17th puts, and either at the money or slightly out of the money, 440s or 435 strike. or you can obviously short gold futures if you trade commodities. But target was 420 to 430. We hit that on the gap down there. You can see we're basically we traded right down into that level there, and then obviously stop above 460, 465. Reclaim of the highs would invalidate this, but this is playing out nicely from some of the tactical ideas that we posted. And then if anybody else trades, yields, you can trade TBT, 20-year Treasury, ultra short 20-year Treasury. You trade that in the long direction. So on a close above 38, let me see if I can bring that up here. Hold on. All right, I'll post this up here too. Let's see here. Here we go. All right, so well, we're looking for a close above $38 or TNX above 4.29%, and targeting 42 to $44. Bonds break above 3% decisively, stop below 36. Um, and, basically just some framework for allocation for defensive tilt here. 40 to 50% cash, short duration treasuries, 25, 35% defensive longs, XLU, XLV, Verizon, some of the telecom stocks, and obviously crude longs, and then bearish puts, shorts on the metals, TBT. So this is just a rundown of instruments that you can trade tactically during this moment of uncertainty, right? You don't have to trade just the index, although that's what we focus on, just some ideas um, for some tactical short-term trading. So hopefully that's helpful. All right, getting back to SPX, we're going to take a look at the hourly chart here. All right, so you can see clear downtrend here. And we had obviously a bounce post market, and then the market just opened up. Futures kind of gapping down a little bit here. Let's take a look at that real quick here. US 500 is the instrument I use to track SPX. We can look at futures too, obviously. All right, so here is our gap down here. If we look at this on a shorter time frame here. So obviously we hit a low of 64.73, and then post after hours, there was some tweeting going on, a little bit of a rally, but you can see markets basically gapping down. Does this fill? There's a good chance that this fills, but a long way to go before tomorrow's open. I don't anticipate that, these short-term bounces that we're going to have here, I believe are going to get faded, and areas of interest that I would look to basically have a more constructive outlook for recovering this downtrend. Now we have to get back up above. If you look at some of these levels here, like this level here from Thursday's high here, this whole level here needs to get reclaimed here before um, we start getting a little bit more constructive to the upside here. So I would mark 66.50 as a nice round number to get back up above. So we may get a little bit of relief, but if WTI is still accelerating to the upside, I don't know that we're going to get too much farther than that. So you could see potentially, there might end up being like a trend line here. Um, a lot of times, you'll see this will come right back up into here and trade back down, but long way to go before the open. So this is just some stuff that I'm looking at short term. Remove all these drawings here. But if we just take SPX daily candle from Friday, and we basically take our fib tool here, and we draw basically um, swing high to swing low from that Friday's candle here. 65.34 is going to be important to get up above to even go back and test the high here. So that's something that I'll probably look for as an area of interest if we get a bounce um, into tomorrow, and obviously breaking down below 64.75, 64.02 is my extension on to the downside that I'll be looking for. But let's keep an eye on 64, 65. We'll say 65.35 and 64.74. So right now, obviously, we're trading right in between that. Still, still early. We're about 20 minutes into the future session. So, with that being said, let's take a look at some of the price action from Friday, and I want to specifically look at the futures because I get a lot of questions about futures and how to trade them if it's the right instrument. So let's just look at Friday's action from the ES. All right, so a couple things. Um, if you're trading futures, you have to have, depending on your brokerage, you have to have a certain amount of money. Obviously, for Webull, I believe you have to have like I believe it's about $2,500 account, and then the margin requirement is like $1,400. So should you enter a position and the position draws down to $1,400, they liquidate your position. So that's what I want to kind of go over and an understanding of. Some people are like, is futures is the right instrument for me? Is options the right instrument for me? Um, and that's all personal preference, and that has to be determined on whether you know that you can set you know strict rules, entries, exits, stops, position size. That's when it's really going to be important because with options there's a fixed amount of risk, right? If you spend $500 on a contract, $1,000 on a contract, that's the most you're going to lose if you get it completely wrong on one position. But on futures, when you get it wrong, um, the loss is, I don't want to say it's unlimited because it'll basically stop you out once you liquidate your you know your margin. But if you got a big account and you're not paying attention, big losses come real quick. So um, I just want to go over the ES plan from Friday, and I'll put it on the chart here, and we'll look at the levels, and we'll see what was um, tradable, what wasn't. So let me bring this up here. Let's see. I think I posted this on X, and I posted this right in the chat. Um, but here, I'll post this right on the chart here. Copy, paste. Okay. All right. So here is here's the New York Open. So heading into the Open here, around 9:15, I came up with this plan, and you can see here current. This is a 15-minute chart, but you can see current price 66.38 to 66.42, so down 20 to 30 points on the day. Choppy open. So the pivot was 66.50, resistance 66.92. Um, and the VIX was 24.25, so elevated. So, 40, potential for a 40 to 80 point ES swing, and this is always determined. So the amount of points, the average true range in a day, is basically a calculation of the VIX, the volatility, um, and it can be calculated daily. You can look to see what's the amount of the expected move for each day, implied volatility, depending on what the VIX is at. So 40 to 80 point ES swings. Bias, so bearish control under 66.50, bullish flip only on a strong close above 66.50. The nice thing about futures is there's no theta. So there's no, um, you know, being in a position and having the premium go down as it goes sideways, right? If you enter a position at if you short the market at 66.50 and the market is at 66.50 at the end of the day, you're even, okay? Whereas if you try to take, 66.45 put at the beginning of the day and the market is at 66.50 at the end of the day, you lose all your premium. That's how options work. You need to capitalize on a move um, to capture the premium. So that's the big I think advantage to trading futures versus options is that a sideways market won't you don't have to you don't have to worry about theta. Let me just put it that way. So anyway, let me bring up the chart here. I'm going to show you how I came up with my futures plan, and then we'll just go over the price action and what that you know yield would have been. Okay, so if you look back here, all right, we have basically equal equal highs. Okay, you've got equal high here, and you had equal lows here. This is heading into Friday's open. Okay, now when I get equal highs and lows on both sides of the range, that tells me that we have very clear levels of liquidity versus just um, you know one big wick off of a certain support level or one big wick off of a resistance level. It tells me that there's a more, I guess, calculated level of resistance or support. Okay, so heading into this area here, we were in between these equal highs and equal lows. So I just took my fib tool and I marked my support down here up to my resistance up here, right? And um, I just used, the Asian session high here, and then I used these lows right here, just because there was some basically kind of like a double bottom. So you basically had like one, two, three kind of equal lows here. Okay. So heading into this session here, now I've got a pretty clear idea of where I need to get above to test resistance, and that's 66.50. So that's how that 66.50 pivot basically is derived is 50% of whatever the range that I'm looking at here. So as you can see, market kind of was trading up into that. Okay, market is trading up into that, and then a nice um, sweep right back down, right off of this. Basically this is the 9:15 candle. Let's look at these are 15-minute candles, but let's look at like 5-minute, right? Here's your 5-minute, and you kind of you have to be like a ninja, all right? And what do I mean by that? Okay, so if 66.50 is our resistance here, right? I mean, I can tell when I'm looking at this, I'm saying, all right, this is resistance, this is resistance here, this is our pivot. We need to get back up over this to get bullish. We get a flush off the open, and then a retest of this area here. So you basically have like a order block here, bearish order block here. So my plan tells me if you look at this candle here at 9:45. So let's say you didn't trade the open at all. Let's say you waited 9:45. Market pushes right back up into this level here. So the high of this candle here is 66.43 here. All right. I'm looking to basically for some resistance. I'm looking for a wick to come off of this here, and I'm basically just gonna follow the plan here, right? So just look down here. So bearish rejection, fade, higher probability today. So biggest reward momentum obviously was if we broke back over the 66.50 level, uh, but the higher probability was the bearish rejection. So you get a flush off the open. The market trades right back up into right into our hands, if you will. Okay, entry short retest of 66.45 to 66.50, or break below 66.30 here, right? So this is pretty much playing right into the plan here. So you short this here, and your stop is simply above 66.50. If you look right here, 66.50. So that's about 15 points above our pivot. Our target is 66.15. Our first target, second target 6600, and last target was 65.80. So you basically enter here and you just follow your rules. So I'm going to basically um, sell at this point here, and I'm going to take profit as I come into that 66.15 level here, right? So you can see right here, 66.15, you're getting a nice flush here. This is a super clean move here. And then you get a close here, and this candle closes at 9:55. This candle closed at 66.07. All right. So we almost came, almost right off that first flush. We come down and tag our 6600 level. But if you're being disciplined here, and if you're risking, okay, if you're risking, basically you're getting in at 66.45, 66.43, whatever you want to call it. If you're trying to capture 30 points here, and you're trying to at least capture 2 for 1, you have to take partial. If you're in multiple lots here, you have to take some off here. You have to secure your trade here. You got to follow the plan. You got to take some off. And then obviously you can set your stop, above, let's just say, once you get once you come down below 66.15, obviously you can set your stop, okay? You can trail your stop here. If you have like an active trader here, you can just drag your stop down above 66.15, and now you're locked into your winner, okay? And then, basically this thing flushes right down to 6600, almost tags 6680. We get I'm sorry, 6580. And you can see here, even if you just drag your stop down here, you're going to get on this candle here. Let's say you're a little bit greedy and you're just holding this thing here. You're going to get stopped out here at 66.15, but you still captured 66.43, 45-ish down to 66.15. Excellent trade, excellent risk versus reward. And then the way that I look at all my levels are, once we hit a level, I want to see if that level acts as resistance or support. So, basically this thing comes down. This is below support, right? So if our support level is 6607, let's just say, and we're trading kind of below it, and we're not really respecting it, we're not really reclaiming it, we come back down. I'm looking down to the next level. So I'm looking down to 6600, and then 6580, which we tagged both of those numbers. And then below that, obviously, we have the extension. So break down below support. Basically this thing right off the open, there was no strength on Friday. There was pressure on the market. We sold off, we consolidated, and we pushed right back down. And the algorithm just kind of just takes over, right? And we trade back, obviously after hours, back up into that level there. But regardless, um, really nice, really clean trade. There's obviously, you can scalp scalp the range as well. Short fade 66.40 to 66.50, but we never even got back up there. So, but make sure that when you're trading, you see basically you have risk versus reward. Risk versus reward. I'm going to risk 1 to make 2.5 plus. Obviously, this was a phenomenal short on ES, and I was never bullish on the day because we were trading well below our pivot, right? There wasn't really any strength. There wasn't a whole lot of, everything was, this is basically what we've been talking about. I wanted to kind of sell the rip, sell any of the strength, and we got that nice, obviously flush down here. We broke, 66.52 was in the beginning of the week. If you watched, um, in the beginning of the week, if you watched the um, Liquid Sundays video, we were looking at on SPX specifically, we were talking about, um, the November lows here. I was saying if we break down below, um, the candle, we'll bring up the daily here. I was saying if we break down below our supports here, I'm gonna look to see if we can tag that 65.21. And not only did we tag it, the market came down and we closed below it. So if there was support here, this would have acted as such, in a more significant fashion. So market is in a downtrend. Has basically when we started breaking down this range here, here's 2026 here. So the market is down, and we're basically down about I think it's seven. Let's see here. We're down about, yeah, about 7.5 percent on the year from the highs. So a decent little correction so far. I've been kind of forecasting that we can get anywhere from 15 to 20, right? So let's say we get 15. You're talking about 58, 59, 5,800. 20% brings us right down to 50, around 5,600, something like that. 5,600 is a 20% correction. So this can take, you know, I want to say, anywhere from 1, 2, 3 months to kind of play out, and we'll keep an eye on things. I don't want to get overly bearish. The market has a way of being pretty resilient here, but definitely looking a lot like last year here on the breakdown here. And the other thing is the squeeze here that I was kind of pointing out several times here. So you've got breakdown, change of character here, squeeze here. This is what happened last year, and now you've got an even longer consolidation here. You got 1, 2, 3, 4, 5, 6, 6 dots on the squeeze. So this thing is in compression here, and if once when and if it fires to the downside, we'll get some significant um, move to the downside. So on the SPX, if the squeeze fires down, so that's that's about it as far as the SPX goes. There's some other stuff we can look at if you'd like. Some other tickers. I did mention SMH. Let me close this portion of the